Welcome back to the program. We are joined again by Peter Schiff, the CEO of Euro Pacific Asset Management and also the host of the very popular Peter Schiff Show. So thank you for coming on. It seems like not a single day passes by now without some new shocks to the international economy. And I thought, yeah, a great place to start might be gold because I remember when I initially began to buy gold back in 2008 and 9, I was actually listening to you, reading your books, Crash Proof especially. But the prices now are quite different, passing 4,000 US dollar an ounce. So what is happening with gold now?
Yeah.
How do you explain this?
Yeah, well, it's easy to explain it because I've been forecasting it for years. When I first started recommending it to my brokerage clients at Europe Pacific Capital, gold was, around 300, a little bit cheaper. So it's more than 10x from there. It's actually done better than the S&P 500 over the course of the past 25 years or so. And that's a reflection of the bad monetary policy and fiscal policy of the United States government that has been destroying the value of our currency. And as a result, you need more units of the currency to buy things. That's why the stock market is so much higher now. It's not because the companies are really that much more valuable. It's just that the dollars that people use to buy them are that much less valuable. So, based on when I first started recommending gold, you need, 4 to 5 times as many dollars to buy the Dow Jones, but you need 11 times as many to buy an ounce of gold, right? That puts it in perspective, because in terms of gold, the stock market has actually declined quite a bit, right? If you measure it in terms of real money, which is what gold is money that the Federal Reserve can't create out of thin air, right? And so its purchasing power is going to be maintained. In fact, gold's purchasing power goes up because prices are supposed to come down. That's how capitalism works. We come up with more efficient ways to produce things. We develop economies of scale, and prices are supposed to go down. And if you measure prices in real money, they do go down. It's only when you're stuck with a fiat currency created by a government that we experience rising prices.
Well, Donald Trump, as well as Scott Bessent for that sake, have been announcing that the economy is booming. Yet we just saw, well, I guess that reaction says it all. But
Yeah.
at the same time, we see that interest rates are now being cut, which also makes the question to what extent defending the US dollar is anymore a priority. But what is the thought or argument behind it? Because is the cheap money going to restore the economic might? But why would it be required then if the economy is booming? How can
Yeah,
it make
look,
sense?
if you're claiming that the economy is booming, and Trump doesn't just say it's booming, it's the strongest in the history of the country. So that means it's the biggest boom, right? It's bigger than the Roaring '20s, right? It's never been this good. And he says it's the hottest economy in the world. So it's the strongest economy in the history of America, and it's the strongest economy in the world. That's inconsistent with demanding that the Federal Reserve slash interest rates. But it's also inconsistent with the public. I just saw yesterday, Donald Trump's approval ratings on the economy, just on the economy, are the lowest they've ever been. That includes his first term. I think he's got about a 33% approval rating on the economy. 60% of the people disapprove of his handling of the economy. Now, if the economy were doing great, you would figure that more people would give him credit for it, right? I mean, usually whether the economy is good or bad, even if it's got nothing to do with the president gets the blame if it's bad, and he gets the credit if it's good. And so if the public is saying they're unhappy with the way Trump is handling the economy, what does that tell you about their personal experience of the economy? Right? The economy is not doing well, and that's why they're blaming Trump and saying, I don't like the way he's handling the economy. If we had the strongest economy in history, then Trump's poll numbers should reflect that, right? The people should be, overjoyed to be experiencing this massive economic boom, and they should have confidence in Trump because they should be crediting Trump for this boom. After all, Trump says that before he was president a year ago, we had the worst economy in the history of the world. Now we have the greatest economy. And so if there's been such a massive transformation of our economy in such a short period of time, you would think that the voters would be rejoicing or the people who are being polled, the public, and they would be giving Trump credit for this miraculous, turnaround, going from the worst economy ever to the best economy ever in just a short period of time. Surely he should get credit for that. So it just shows you that it's all BS. And I don't even know if Trump believes it. Most likely he doesn't. When he was running Trump steaks and he told people that the Trump steaks are the greatest steaks in the world, did he believe that? Or was he just trying to sell his steaks? Now he's just trying to sell his presidency. He's trying to get the public to believe that, his presidency is a great success. And so he just hypes everything up. And so people should take what he says with a grain of salt. None of it is real.
Well, he is the king of branding, I guess, the marketing aspect. But of course, at the heart of it, something should be real here, though. But to what extent do you think is a problem with how we measure as well economic strength? Because this is often a criticism, isn't it, that we measure everything in GDP, but especially in international politics, when we assess, for example, military spending on China, we neglect that often what they can do with a dollar. They can buy many more bullets and buy a lot more ships than for that dollar, as opposed to its European or American counterparts. Do you have a better assessment how we can measure wealth and wealth creation?
Yeah, well, GDP is not the best measure. It's the one that we use, but there's a lot of problems with the GDP because there's a lot of stuff that doesn't get included in the GDP. The value of leisure, to the extent that I have a lot of free time and I just enjoy myself and I relax. That's not in the GDP. On the other hand, if I get tied up in litigation and I have to spend a lot of money on lawyers, that gets added to the GDP. Obviously, I would rather not have a bunch of legal bills. So why is that a good thing? Same thing with medical bills. If I'm very healthy, that, doesn't help the GDP. But if I get really sick and I got to spend a lot of money on doctors, then that makes the GDP go up. If a hurricane destroys my home and I have to rebuild it, that makes the GDP go up. But if no hurricane comes and I don't have to rebuild my house, then the GDP doesn't go up. So, there's a lot of stuff in there that it's not the best measure, but it's the one that we use. But one of the reasons that it's also unreliable is because it's skewed by rising prices. So if we're going to look at the economy and just put a dollar price tag on it, obviously, if we have a lot of inflation, then the GDP is going to keep going up, just like everything else. Now, we're supposed to fix that with what they call the deflator. That's supposed to take inflation out. So you don't just get a number going up because of inflation. It's supposed to be real growth. The problem is the GDP deflator, like the CPI, doesn't even come close to measuring the extent to which prices are rising. So I think the GDP is a bunch of BS, just like the CPI. I think that if the GDP now is running at about 2%, I think the economy is actually contracting because I think the GDP deflator understates inflation by more than 2%. So I think if we had a more accurate measure of prices, then we would see that there's no real economic growth in the U.S. economy. And that's why the president is so unpopular, right? Because the economy is not really good. People are struggling in the economy, and that's why Trump gets low marks.
So if a country borrows $1 billion from China to buy Chinese consumables, this also boost the GDP, or?
Well, remember, we subtract our trade deficit.
Yeah.
That's a negative. But so let's say I buy something from China, but I go to Walmart to buy it, right? Walmart marks it up, right? So part of that sale gets added to the GDP. But let's say Walmart buys something from China for $1 and then sells it to me for $2, right? So the $1 gets included in the GDP, right? Because that's the local markup, but they subtract the cost of importing it in, that dollar. So, I mean, if you look, so, so that is a negative. The fact that we run these big trade deficits is reducing our GDP, and it should. So, I mean, it would be better if we produce the stuff ourselves. But no, and of course, the value of the stuff that we import from China produces it, so they count it in their GDP. If we counted it in our GDP, we'd be double counting the same thing, right? So the nation that produces it puts it in their GDP, and we don't include it in ours. So we it comes in, and then we subtract it out.
I remember in the 90s and 2000s, the big talk was that we had transitioned away from a manufacturing economy and we're moving towards the service economy. But these days, it wouldn't make anything though. That's
Yeah, I mean, we make some things. We don't make nothing, but we make a lot less than we used to, and we don't make nearly enough. Now, I was talking on my own podcast the other day because there were some layoffs announced. Amazon was laying off a lot of people, and UPS was laying off a lot of people. They are two of the top employers in this country. In fact, Amazon is number 2. Number 1 is Walmart. But of the top 10 employers in America, 8 are retailers, just stores. And the other 2 of the top 10 are UPS and FedEx. And so what do? They just transport all the stuff that you buy from the stores. So all of our employment, our top employers, are concentrated on distributing the stuff that we import. But, look at Japan. President Trump is in Japan, or he was. I think he probably left. But he was in Japan. And 8 of the top 10 employers in Japan are manufacturing companies. And so that just shows you they are a nation of producers. The Japanese are hard at work making stuff. We're just pretending to work, right? Or we work, but we don't make anything. We just, service one another. But, if we couldn't get goods from Japan and China and the rest of the world, there'd be nothing for Walmart to sell. And so Walmart wouldn't need all these workers because nobody would be going to the stores. Why would you go to a store when it's just empty shelves? So you take away the imports, and all these jobs that we have that are associated with distributing those imports, they all go away.
Well, I wanted to circle a bit back to the cut in interest rates, and I was wondering though, to what extent do you see the government now financing debt by printing new money, so monetizing the debt? Because obviously it's going on to a massive extent, but how can we understand the consequence of this? That is, instead of taxing the public, one simply prints the money to cover.
Well, that's what they've been doing, and now they're going to do it faster now that they're ending quantitative tightening. But I think that's just the first step to the eventual resumption of quantitative easing. And that's, the government, the Federal Reserve just going out there and monetizing government debt, which they're going to do because the government is going to have a difficult time finding buyers for that debt in the private sector. The reason that gold is around $4,000 an ounce is foreign central banks have been buying gold instead of dollars. So instead of holding dollars and then buying U.S. treasuries, those dollars, they're selling their dollars and buying gold and just putting the gold in a vault. And so that makes it more difficult for the US to finance its debt because we have to find somebody to buy it. And we're going to have to pay a higher interest to encourage people to buy it based on the risk of inflation and dollar devaluation. But we can't afford the higher interest rate because the amount of debt that we're financing is so large. So that's why there's going to be a lot of pressure on the Fed to finance it. But when the Fed finances it, it has to create inflation to do it. And so the trade-off is, yes, the Fed monetizes debt to keep rates lower, but now inflation pushes the price of everything higher. And those higher prices are just a disguised tax, right? Because if the government takes my money, then I could buy less stuff, right? So they take my money in taxes, I got less money, I buy less stuff. But if instead of taking my money, the Fed just prints money and spends it, now prices go up. I got the same amount of money, but I can't buy as much stuff. Now everything costs more. So I'm buying less stuff. So the government is taking my purchasing power either way. Right? So inflation is just a hidden tax. And, the government likes it because it's hidden, right? Most people don't connect the dots between rising prices and government spending. And so they don't realize that when they go to the store and they pay higher prices, they're actually paying a tax. They don't get that, which is why the governments like inflation. That's their favorite tax because most people don't realize they're paying it.
Well, if we consider then
And, they get mad. They get mad at the business that raised the prices, right? And then the politicians demagogue it. How dare those greedy companies raise prices, right? They're raising prices because the government created the inflation. It's not their greed that's doing it.
also, printing more money becomes then a tax in terms of reducing the spending power. But given that a lot of countries around the world are actually holding the US dollar, it also becomes a form of taxation on the world, which kind of begs the question, if the inflation isn't kept at a moderate or modest level, to what extent will the rest of the world then avoid investing money in the US dollar? Do you see I mean, there was a big assumption in the early 70s, 1971, when the gold window was closed and the foundations of the Bretton Woods system was shaken. Do you see this possibly leading to the end of the dollar? Or?
Yeah, well, I don't think it's a possibility. I think it's a strong probability. I think we're in the middle of that or the early stages. I don't know that process now. The de-dollarization is ongoing. And yes, inflation is a tax on all holders of dollars, not just Americans, but anybody around the world who is holding on to US currency or a debt instrument that is a promise to pay US currency. You're paying a share of that inflation tax. And I think more foreigners, and in particular central banks, don't want to pay that tax, especially since the tax is going to go a lot higher. And so that's why they're cashing out of their dollars and they're moving into gold. And that's why the price is $4,000 because a lot of central banks have been buying gold and pushed up the price. And a lot more are going to be buying gold as an alternative to the dollar. I think it's the best alternative to the dollar. And I think a lot of people who are very complacent about the dollar's role as the reserve currency, which is the very basis of our consumer economy and credit bubble economy, people think that we have nothing to worry about because there's no other currency that's positioned to replace us. They say we're the cleanest dirty shirt in the hamper, which, may be true, maybe not. I mean, I think we're dirtier than some of the shirts, but I agree that pretty much all of the fiat currencies are in that hamper. But gold is not in there. Gold is pristine. Gold is real money. And so when people are convinced that the dollar's status is safe because the euro is not ready to take its place, or the yen or the pound or the RMB, they're overlooking the obvious alternative, which is gold. And that's what's happening. You don't have to back your currency with dollars. You can back your currency with gold. Gold is your primary reserve. It's a lot better than a currency because it's not simultaneously somebody else's liability. You don't have to worry about being sanctioned because if you own gold and you've got it in your vaults, it's yours. Can't be sanctioned by the United States. and you don't have to worry about money printing. You don't have to worry about deficit spending. Gold's value is going to be maintained. So this is what's happening. The world has woken up. They don't want to play this game anymore. The dollar's days as the reserve currency are numbered. I just don't know how big that number is. Nobody does. But it gets smaller every day. Every day we're a day closer to the end of it.
So, yeah, because the United States recently went into $38 trillion in debt, but it's, of course, it's not alone. We see in Europe as well, a lot of the largest economies are now going into unsustainable debt. And obviously, the problem, as you said, is the fiat currency is not being backed by anything. They can simply be printed too easy. And it does appear this is a strategy of getting out of economic trouble, just print your way out. But is gold the only escape, though? Because many people are very optimistic about crypto. But again, this is very, I guess, a divisive solution. I take it you are on the other side of the fence here in terms of
Yeah.
Bitcoin being the solution.
Well, gold isn't the only, store of value that you could buy. I mean, you could obviously buy other precious metals. I think silver is, looking very good here. I think it's still even cheaper than gold. It's around $48 an ounce. I think that's a good value. It got as high as 54 and change just a couple of weeks ago. 50 used to be the double top. We've now taken that out. So I think we've got a lot of upside in silver. We don't have that big resistance anymore. We've already pierced it. But you can buy real assets. I mean, I like foreign equities. We buy a lot of good dividend paying foreign stocks that I think are going to, throw off really good, real returns, both dividends and capital appreciation for clients. So, we invest in a lot of stocks. I manage mutual funds that I think will do very well. People can get information on all of my funds, which can be bought no load at a discount broker at europac.com, or you can talk to our representatives about setting up an account with me for us to manage here in the types of stocks that would do really well in this environment. For gold, you should contact Schiff Gold and pick up some gold and silver. You can do it completely online. We'll either ship it to you or you can, have it stored. Either way, but you can own physical gold and silver just, through Schiff Gold, which I would recommend. As far as, Bitcoin, yeah, look, there are people who believe Bitcoin is digital gold. I believe they're wrong. I don't think it's digital gold. I think that's the meme that you use to market Bitcoin, but I don't think it's any more digital gold than an image of a hamburger would be digital food. Sure, it may look like real food, but you can't take a bite out of it. You're not going to get any calories. If you have a diet of digital food, you'll eventually starve to death. So it's not going to work. I think Bitcoin is going to implode at some point. Now, it's continued for quite some time, and it's gathered a lot of disciples, a lot of believers in this. And so when you're buying Bitcoin, you're making a bet that more people will believe in it in the future than who believe in it now. And, you have to really believe that nothing is something. And to the extent that you could believe that, you may buy Bitcoin. And if more people believe it, then more people will buy it. And the people who own it will be able to sell because there'll be new buyers that want in. But, you never know when people are going to wake up or they're going to run out of fools who are willing to buy into the concept. And then eventually the people who are believing, a number of them stop believing. They see the light, they wake up and then they want to sell. But if there's no new buyers, then the whole thing implodes. So I would not buy Bitcoin if your goal is just to have an inflation hedge, to get out of the dollar, to protect yourself. It's more of gambling on group psychology. Yeah, a lot of events could happen that may drive more people into Bitcoin, right? High inflation, a dollar crash, more people could be seeking a safe haven. And if they end up seeking that safe haven in Bitcoin, then Bitcoin can go up. But they may not. They may come to their senses and Bitcoin can crash. But I think gold's not going to crash. I mean, I think gold really is what Bitcoin pretends to be. And so I'd rather just buy the real thing or buy silver or something else that's tangible or invest in the gold mining stocks. I think they're going to go up a lot more than gold. I think they're even cheaper than the metal. So there are a lot of ways to play the gold market. I would not include Bitcoin as one of them.
I wanted to also ask about the wider the direction of the global economy. For the US, well, under Trump, some of the ideas around reviving the economic strength has been to move production to the United States. And Trump has been pressuring also a lot of allied states to do this. Well, I think he tweeted yesterday that the South Koreans had promised that they would direct their financing to the US. So they had committed $350 billion. And again, I'm not sure how accurate this is, but do you see any success in terms of getting countries around the world to shift their money back into the United States?
Well, I mean, first of all, I think a lot of people are saying what the president wants to hear. They want to get on his good side. They want to give him a soundbite. So I think a lot of this talk about countries, I'm going to invest, 2 billion, 10 billion, whatever it is, those are more like optimistic, goals that maybe they'll achieve or they won't because there's no enforcement mechanism. They're not obligated to do anything. So they're just kind of stating this is what we're going to do, maybe. And now Trump can come out and take credit for it. Also, it's hard to know, what these companies would have done anyway. I mean, there could be a Japanese company that was already going to invest in a U.S. plant, and now Trump is just taking credit for that investment that would have taken place anyway, right? So you don't know, I mean, how much is really new versus how much, was gonna come, here on its own. But overall, I don't believe there's going to be a lot of resourcing of U.S. manufacturing because there's a reason that it got outsourced in the first place. And Donald Trump is not really getting to the root cause of that. And so from an economic perspective, even with the tariffs, it's still more viable to produce abroad and pay the tariffs to bring the stuff in than to try to recreate those industries here from scratch. It's not just the factories, it's the supply chains, it's the infrastructure, it's the workforce. It is a massive investment that would be required. And to the extent that the only reason that the investment makes sense is because of tariffs, but nobody has any certainty as to how long those tariffs are going to stay in effect. I mean, Trump could get rid of them whenever he wants, or, he's only going to be president for another 3 years. And so many of these, projects may take 5 years to even complete them. And so who's going to invest, billions of dollars into building a factory that won't even be viable for another 5 years when you have no idea if the very tariffs that are what makes that viable are even going to be there? But, and a lot of the problems too is if you build a factory here, but you still need to import foreign components, well, you're still going to pay those tariffs. Whereas if you build it abroad, you don't. So part of the problem is if you build a plant in America, you're pretty much closed to the U.S. market, meaning whatever you build in that plant, you got to sell it in America. You can't really sell it competitively anyplace else. Whereas if I leave my factory in China, right, I can make stuff and sell it everywhere in the world, right? It's not limited to the U.S. So it may not even be viable to put a plant in America where your only customers are Americans and you can't export it to Europe because it won't be competitive because of the higher cost. So, look, most of this isn't going to happen. This is all a bunch of talk. And Trump is bragging about all these great deals he's negotiating and all this money that's going to be vested in America. Most of it is just talk. Some of the money would have been invested anyway. A lot of it is never going to be invested.
Well, my last question, though, is where all eyes are at the moment in the current economic, well, turbulent era. We see this economic war between the United States and China. I guess rivalry for who's going to be on top.
Yeah.
How do you see this developing?
How do I see what developing?
The economic war between the United States and China, because well, it goes in many areas, everything from holding on to the dollar, but I guess primarily within maintaining tech leadership.
Well, look, I think if it's an economic war, we lose because I think the power is with the producer and the creditor. I think Donald Trump, is reading the relationship wrong. He thinks that we have all the cards because we buy everything. And we borrow the money. But anybody could do that, right? I mean, anybody can consume what's already been produced. Anybody can borrow money. Somebody's willing to lend it. The key is to produce the stuff. That's what's difficult. You need factories, you need resources, you need workers. China's got the factories. They've got the infrastructure. That's the important part. And it's much harder to save money than to spend it, right? Spending is the fun part. You just go out and buy stuff. Savings is a sacrifice. It's under consumption. It's earning money, but then not spending it, right? Finding ways to get by with less so you could save more, right? So that takes hard work. Spending money is very easy, right? So to think that we are the important part of this relationship because we borrow and spend. Talk about putting the cart before the horse. China produces. Without production, there's no consumption. China saves. Without savings, there's no borrowing. There are more of them than there are of us. There are 3 times as many people in China. They can spend. They can, there's no shortage of demand in China, but there's a huge shortage of supply here. We don't have the factories. So if there's a war, China wins. In fact, China's been propping up our economy. Trump doesn't understand that, and neither do a lot of people in his administration.
Well, the Chinese put some threats with the restricting the rare earth exports, and it appears that Trump and Xi has come to an agreement where some of this would be well, not prolonged, but it will be delayed at least. Do you think we dodged a bullet, or do you think the trade war will simply continue?
Well, I mean, I think the trade war is going to continue for as long as it's politically advantageous for Trump to wage it. But it does damage the economy, whether he realizes it or not. And so I think that it won't escalate to match his rhetoric. And to the extent that he does, threaten, 100% tariffs, it's just talk. Right now he's got the nickname Taco. Trump always chickens out. And I think as he, makes these threats, more and more it's going to be like, the boy who cried tariff. Eventually people will realize that, it's not really going to happen. But there are tariffs, right? It's not like there are no tariffs. Tariffs are much higher now than they've been in the past. And it's not a good thing. I mean, it will raise revenue for the U.S. government, which the government needs revenue. So I guess that's positive because it somewhat reduces the deficits. And so a little less that we have to borrow because we're collecting it in tariffs. But the tariffs are being paid by Americans. They're not being paid by the Chinese or the Canadians or the Mexicans. They're being paid by Americans, and they're being paid by the working class, the poor, the very people that Trump claims that he's the champion of. They're the ones that are picking up the bill for the tariffs.
Well, before you go, where can people find you and your company?
Yeah, well, they can find Euro Pacific Asset Management online at europac.com. We manage separately managed accounts at my asset management company. So if you got a portfolio that you'd like me to manage for you, I mean, we have great strategies, global diversified strategies that will benefit from a weak dollar, stagflation, rising commodity prices, rising foreign currencies, and increasing demand in the emerging markets. I think all the trends that are now in place and are going to continue, we are positioned to benefit from those. So you really should have move an account. I think getting out of U.S. assets, getting more into the global assets is what people need to do. That's what worked in the 70s. You got killed in the 70s if you stuck with the U.S. market. But if you invested abroad, you made a fortune. I think this time, it'll be even better because the problems are even worse. And so I think the relative outperformance between foreign markets and the U.S. will be even greater. And of course, the appreciation in commodities, gold. You got to buy some gold and silver. I got a company, Schiff Gold, you can go to and you can buy. We'll give you great prices. You can buy online. You can talk to our specialists. That'll help you. Schiffgold.com is the website. Got a free newsletter that you can subscribe to at sovereignshift.com. We put out several issues a week. Just go to the website and sign up to start getting the thinking in your inbox. We also have paid products with investment ideas and things like that. If you're a do-it-yourselfer and you kind of want to manage your own money, but you want some help picking stocks, we can provide that service for you as well. And don't forget to just, follow me on social media. I got over 1.2 million subscribers now or followers on X. I post a lot there. So if you want to know what my thinking is in real time, just follow me on X and you'll know. And watch my podcast, the Peter Schiff Show podcast. You can see it on my website at Schiff Radio. You can go to iTunes or Stitcher or any of these places that have podcasts, Spotify. You can watch it on my YouTube channel. There I put it with video. I do it live. So you could subscribe to Peter Schiff YouTube channel. I also do videos for Schiff Gold. So you can subscribe to the Schiff Gold YouTube channel. I'm on Facebook, I'm on Instagram, I'm on TikTok. So anywhere that there's social media, I'm there somewhere. So find me and follow me and use my content and get other people, tell other people about it. Because there's a lot of misinformation out there from, the establishment that are spoon feeding the public, really a bunch of lies. And I'm telling the truth, but I don't have as big a platform as the mainstream. So I need the help of my audience to tell other people to listen to me and to find and where I am online. And the more people I'm speaking to, the more impactful my words are going to be.
Well, as always, greatly appreciate your time. So thank you again for coming on.
All right.
Bye.
Take care.